Quite frankly, crypto's lackadaisical, I'd say. There's a constant bid from retail. We're seeing it through all the platforms. And there's not a lot of institutional excitement right now. And so we're not seeing the institutions come in. That got stopped by a combination of Sam and Gary, Sam Bankman-Fried and Gary Gensler. And so you're seeing lots of interest still, just not a lot of activity. But if what I think is going to happen happens, and we see a real slowdown in the second half of the year, the Fed will be cutting rates by October, and crypto is going to be off to the races.
Doing the people. Oh, somebody! Oh, he needs some milk.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a wonderful start to your weekend. Bitcoin's still just kind of hanging out, and let's be honest, this is boring. I mean, Fear and Greed Index sitting at exactly 50. It doesn't get any more neutral than this. No one's scared or freaking out. No one's super bullish. We're just kind of all sitting here waiting for something to happen for Bitcoin. Well, there's a lot of things I'm going to talk about in today's video. Number one is the fact that we had the US debt ceiling deal. What does that mean for Bitcoin? Now, there are some people that are speculating that short term, this could actually be bad for Bitcoin and crypto. I'm going to explain why that is, but I'm also going to tell you why it's massively bullish for crypto actually in the medium to long term. Another thing that's absolutely crazy is Ethereum staking has skyrocketed literally over 400% in just the past month. What is going on? Why is everyone suddenly so interested in staking Ethereum now versus previously? What is causing this? Well, there is a lot of, different speculation. We have seen, for example, the fear of the banking system. We've seen a lot of crypto companies, unfortunately, moving out of the US, right? So this is kind of bad for crypto in the short term, and we still have people like Elizabeth Warren, well, we'll get to her in a bit, trying to really just stomp out crypto with this anti-crypto army. But I do want to talk about something that we are seeing in Bitcoin that not a lot of people are talking about. In fact, there's something that happened that you could argue has actually potentially broken this cycle. Now, before you freak out, it's not actually in a bad way. It actually goes to prove that Bitcoin is in fact here to stay. And lastly, we're going to talk about something that I'm seeing in the charts right now that we absolutely cannot ignore. So super quick video today, guys. We're going to get straight to the point. And because the TA is kind of boring, I'm going to throw that to the end of the video. So let's super quick talk about what's going on. So we did have the passing of the debt ceiling bill. This happened literally yesterday. And they say that this provision will enable the US government to continue spending indefinitely until January 2025. The total federal debt is projected to increase to 36 trillion from 31 trillion. So they say that in short term, cryptocurrencies may encounter some sell-side pressure due to a monetary contraction resulting from a potential increase in T-bill issuance. However, the long-term outlook is bullish as markets will experience unlimited spending, and I think we all know they're going to turn the money printer back on, right? Members of the Federal Reserve Board, Governor Philip Jefferson, has actually called for a temporary pause in rate hikes to allow time for the data assessment. And just to put it out right now, there's about a 77% probability of there being a rate pause, right? And we know what's going to happen. They're probably going to keep it there for a little bit. And we've been saying, the end of this year into 2024, I've been saying 2024 and 2025 is just going to be the absolute year of the bull. Now we're seeing that staked Ether has reached a record high as of last month. Now, why is this? Well, it actually sounds kind of crazy, but it all ties into each other. The record surge in Ethereum staking in May, they say, was attributed to the ongoing US debt ceiling saga. Confidence in the US dollar, bank collapses, and high APR basically is why people have moved over to staking Ether, because they're realizing, well, I don't even want to keep my money in a bank. I don't trust banks. Is my money even going to be there tomorrow? There's really, what are you going to get? If you get 5% in a CD over 5 years, but inflation is the highest it's been, in 40 years, then what are you really making? It's basically like if inflation's up at 6% and you're making 1%, so you're only losing 5%? Oh, that sounds like a great deal, guys. Let's just go with that, right? So talking about what could be happening in the future for Bitcoin, we had an essay that came out from BitMEX founder Arthur Hayes. If you don't know who Arthur Hayes is, he's an OG in the space. He's pretty smart when it comes to stuff like this. And he says that the U.S. banking crisis and macroeconomics didn't really push Bitcoin as high as some people had hoped that it would. However, it's still holding up quite well compared to what's going on with, all this banking and FUD that's been coming out. He claims that hopes for Bitcoin reaching a new all-time high remain, and he's predicting that the bull market, the major bull market, is going to be starting at the end of this year. This is kind of what we've been predicting too for a while. We'll talk more. The key factors that would push Bitcoin upwards include dollar liquidity on financial markets and technology and adoption, but he says that the Fed created the current financial situation, obviously we know this, by hiking interest rates. Their objective was to slow down the highest inflation levels in the past 40 years. The financial institution has been successful, but its actions could backfire. He goes on to say, inflation is coming down, but banks and other sectors of the world economy are suffering due to the increasing rates. Thus, the Fed must take two paths, cut or continue raising. But it sets up a situation wherein regardless of which path the Fed chooses, be it hike or cut rates, they will accelerate inflation and catalyze a general rush for the exits from the parasitic fiat monetary financial system. So basically, in a nutshell, he says that Bitcoin wins either way, right? Like, for example, if the Fed raises interest rates, the banking crisis in the US and the world could worsen, right? That could happen, thus precipitating people's exit to independent forms of money, such as Bitcoin, gold, and other commodities. But on the flip side, if the Fed cuts, the US economy will grow, and the financial markets could stand on the same hill as in 2021 when Bitcoin price hit 69,000. He says that this happened because wealthy individuals had enough money to invest in risky assets. So it seems like either way, right? Either way, they're going to continue going down the road of this this banking crisis, and people are going to begin to trust their banks less and less. They're not going to want to keep their money in these traditional systems. They're going to most likely go into these things like Bitcoin, or the Fed, the opposite happens. They cut, they slow down, whatever. They start turning on the money printer, and then people have such excess amount of money that they just buy Bitcoin anyway, right? So it's pretty much like Bitcoin wins in the end no matter what. And you're seeing a lot of people affected by this, including Circle, for example. They're the guys behind USDC. They've taken a significant step in response to concerns over the debt ceiling. They have transitioned to holding 100% of their funds in overnight US Treasury repurchase agreements. The CEO emphasized the importance of prioritizing short-dated U.S. treasuries because remember, they were kind of in the middle of that whole banking collapse situation and everybody they were trying to blame crypto. Like, oh, crypto's collapsing the banks. Crypto's not collapsing the banks. People were trying to cash out their USDC and the banks didn't have enough money in there to cover it even though they were supposed to. So it was actually the bank's fault. It wasn't Circle's fault, right? Although, I'm not going to lie, moving to these short-dated, whatever, overnight type treasury things, whatever you want to call them, it's not always the greatest thing because, you are going to get that volatility as well, but I suppose it's better than just keeping it all in cash, which they don't even have anyway. But again, I'm sure you guys have heard about this. Elizabeth Warren attacks crypto by mentioning that people are using it to trade. I'm not even going to say this on the channel because I don't want to but this stuff right here. And I mean, come on, guys. Do you really? Everybody knows that dollars are what people are using. Look, are some criminals out there using Bitcoin? Maybe. So, this, as people say, this should be a reason that she would try to tell people to, close the off ramps, which would be crazy because then no one, including me or you, would be able to get our money out of cryptocurrency, which is kind of scary, which is in that case, I'd probably just straight up move to another country because that's pretty draconian. But yeah, I mean, it's ridiculous. So a couple people might have used it to do some stuff, so we should just completely shut it off and ban it, right? Again, I can't stress it enough. Is the tool, crypto as a tool, is the tool the thing that's dangerous or is it the person that's using it, right? right? Do you just shut the internet off? Do we just ban the internet because some people are doing things they're not supposed to be doing? Do we just not sell knives at grocery stores because somebody stabbed somebody one time, right? Do we not sell power tools and chainsaws and stuff because one time somebody did something? Like, no, it's the people. It's not the tool itself. It's not crypto. Crypto is not the problem. Cutting off people's access to cryptocurrency is the most ridiculous, non-progressive thing I've ever heard of. And, you're seeing like a lot of these other countries, they've been moving to other places as well. And, like, for example, Gemini, they're moving to the UAE because the UAE is very friendly. But as Brian Armstrong has warned, he said that the U.S. approach to crypto will weaken the country's national security posture. With the recent launch of its digital yuan, and this was in a letter that he gave out, he posted this, China aims to directly challenge the U.S. dollar and its role in global commerce. Given these moves and China's strategy to leverage financial technology to protect its own national interest, it should come as no surprise that Hong Kong is positioning itself as a global crypto hub. Failing to secure crypto technology in the U.S. today will push a financial burden onto the country's next generation, right? We're spending, which is, I'm okay with that because I don't know how to say this. Somebody, you know who it was, do you guys know who Leah Hilpern is? Do you know who she is? We were talking, and these are her words, not mine. We were talking in Miami, and, she was like, I don't care about these older people understanding crypto because they're all going to eventually just die off anyway. So we don't need to worry about what Gensler or Warren think about it. And it was kind of morbid, but I was thinking about it and I was like, I guess at some point, like, not only will they be out of the system, but they will actually be dead. Like, that's really morbid, but maybe at that point, then we can actually get some legitimate people, into the system, into Congress and all this. But like he says, that was a bit of a sidetrack. We're spending billions today to repatriate technologies like semiconductors and 5G infrastructure. We should have learned from that mistake. Bringing crypto and blockchain innovation back to the US in a decade from now will require a colossal and sustained effort that may not succeed. And in the meantime, a lot of these other countries are getting ahead. But nevertheless, guys, Galaxy Digital's Mike Novagratz, getting off sort of the doom and gloom side of it, he was talking about how unfortunately you're seeing lots of smaller retail interest with all the little accounts, but you're not really seeing that interest from the institutions. But it's not because they're not interested. It's because they are worried with everything that's going on with Gensler, with Warren, with the lack of regulatory clarity. They just don't want to get involved in it, but they are interested in it. And Mike Novagratz does see inevitably that this does turn out to be ultimately positive for Bitcoin.
Quite frankly, crypto's lackadaisical, I'd say. There's a constant bid from retail. We're seeing it through all the platforms. And there's not a lot of institutional excitement right now. And so the dog days of summer started early in crypto. Doesn't make me thrilled, but that's just the reality. That said, there's a couple things that happened today which are pretty interesting, right? WeChat just enabled Bitcoin and crypto trading on the biggest single platform in the world. That's a pretty big deal. Hong Kong is officially allowing crypto trading for retail customers through regulated exchanges, first time. And so we're seeing Asian adoption, and we're seeing, like, in some ways, Bitcoin's up 55% or 65% this year. Ethereum's up 55% on lower volatility than we've seen. And so in lots of ways, these have been two of the best performing assets there are.
Last time you were on, Mike, someone took offense that you kind of conceded that a lot of the buying was by people that already own it or people that are already involved, and there's no new adoption, and that's a problem. Is that still?
No, what we're seeing is the new buyers are all small, and they're aggregated on these platforms. If it's Revolut or Robinhood or Square, the Cash App from Square, and they continue to buy small amounts and hold them. And so, in some ways that makes a pretty healthy market because these are long-term hodlers, as they would say.
Yeah.
We're not seeing the institutions come in. That got stopped by a combination of Sam and Gary. Sam Bankman-Fried and Gary Gensler. And so you're seeing lots of interest still, just not a lot of activity.
If you really were going to invest $10,000 right now, would you think $27,000 for Bitcoin is a better buy than a year where you get $500 back?
100%. Because listen, the Fed is going to pause or skip or whatever you want to call it.
Listen to the billionaire. Listen to the billionaire.
And then we'll see the data come in. And if the data continues to slow, and it's mixed data, right? The retail services space continues to be vibrant, and the rest of the economy is slowing. But if what I think is going to happen happens, and we see a real slowdown in the second half of the year, the Fed will be cutting rates by October, and crypto is going to be off to the races. Like, the U.S. economy will slow. All these interest rate hikes will have impact. The banking crisis will stop lending to small businesses, which will finally show up in employment. It just takes a while. And so I think if we're talking in October, the Fed will have a very different tone, and that will be the catalyst for assets, especially gold, silver, Bitcoin, Ethereum, to head higher.
But nevertheless, guys, we are sitting at a 50-50, very neutral moment for Bitcoin. So I do want to get into what is going on right now in the chart. So obviously we can see that we did not have a great month, okay? Pretty much if we zoom in right here, last month, we got rejected at this very, very critical level, and we have continued to push lower. Now, we did have a lot of buying here. There was that nice tail, right? There was that buy, but it wasn't as aggressive as this right here. So that is something to keep in mind, right? And also, if we come over here, I will just mention that we are still holding above the 200 weekly. So, we're kind of just hanging around on it, but, the longer we stay here, ultimately that should provide some form of support, right? Over here, you could see that we are still sitting below. We are looking to potentially have this EMA ribbon flip, and historically speaking, when we do see that, it tends to be a very big deal. And right now, we're still perfectly in this parallel channel. I mean, you couldn't make this any more exact, right? So basically, the areas that we're looking for are hitting. Theoretically, I still think that the $25,300 area should have been hit. I know it's outside of this. I think there's still a potential to fake people out, right? And so that would be a good area if you were interested in trading, if you guys want to learn how to trade. Tutorials above, tens of thousands of dollars in bonuses below. Take advantage of those, guys. And I have all different exchanges. I know there's some exchanges that are getting weird with the US, guys. There's always exchanges I'm not going to tell you what to do, but check out the links. There's always places that you could be trading. There's always someone out there that's willing to take your money in the form of fees, right? Just be careful and don't keep more on there than you can afford to lose. But again, we're still just trading between 25.3 and 31. If we don't, at some point, once we get out to like July, then we're going to have to make a decision. But as long as we stay above this green upward sloping trend, we're still putting in higher highs. We're still putting in higher lows. Again, macro trend still intact. And, if you really look at the similarities between this right here, come down here and look at what's going on with Market Cipher, and look it up here, right? And look at what's going on with Market Cipher right here. Very, very, very similar looking charts, which is leading me to believe that we are in fact due for the beginning of the bull, which is what a lot of people are agreeing with me as well. And the other thing I wanted to point out is just looking at the fact that the stock market, and Bitcoin tend to sometimes move in tangent. Well, the stocks are actually right here, finally breaking above this upward sloping trend. And you can see right here, we've had this major resistance. Currently, we're at around 42.79, and 42.98 was this previous top right here. So, if we can break above that level, technically, if you want to go to the wick, it was actually around 43.20, but the close was closer to around 43 even, we'll say. So, if this actually ends up breaking, then it might actually bring Bitcoin up with it, right? And the one thing that I wanted to just end on super quick is, talking about these Bitcoin cycles. So has the cycle broken? Well, not the 4-year cycle, but the fee cycle, right? So they have the 4 epochs right here that you could see, and they go in order of green, pink, blue, right? Excuse me. Did I just call orange green? Am I okay? Am I okay, guys? So it starts with orange. So you can see right here, cumulative fees are around 8.98K. These are for the miners, right? The next epoch, the fees were around 38.4. And the third one, the fees are around 165.6. Now, this is leading up to the halving. Now, understand that, of course, there is still some time leading up to it. But what's interesting is you could see that, we went from orange to pink, all the way up to blue, and then we fell all the way down to green. So what does this mean? Well, it's actually not bad at all. It might suck a little bit for the miners because they're not making as much in fees, but it's actually showing that the network is becoming more efficient. I mean, one of the things that people were worried about back here was how high these fees were. They were like, this is crazy. No one's going to be able to use the network, right? Well, with all these different upgrades like Taproot and even just going back to like SegWit and all that stuff, just all these different upgrades that we've put onto Bitcoin have actually allowed the network to run smoother and cheaper. So even though, yes, you could say that the fee cycle has broken because, you know, we're not going higher, maybe that's a less incentivization for the miners, that they're not making as much in fees, but it's definitely an incentivization for the average user to use the network, which would then encourage more network usage because of cheaper fees, which then kind of could end up flipping and balancing out anyway for the miners, right? So just pointing that out, guys. It's not a bad thing, but it's showing that, you know, the network is progressing. So anyway, guys, that's it for me today. Again, you know, a lot of people have been asking me about Engrave. So like I said, I was going to make an Engrave tutorial, but can I be honest with you? It almost feels like a waste because it's a very, very, very easy wallet to use. I mean, like the instructions literally verbatim tell you what to do, but maybe I'll make one anyway. The only downside is that, you know, they don't have all the ecosystems on here. Like obviously they have like Ethereum and stuff like that, but you know, check it out if you guys are interested. There is a link below for that. And I just actually reached out to the Engrave team. And I was like, hey, maybe you guys can offer my subscribers 10% off. So I think they might be applying that soon. I don't know. I'll let you guys know. I just figured, you know, I reached out. I was like, hey, you know, people are looking for alternatives. So maybe if you guys, because I know these are like kind of expensive, and I was like, if you guys could like maybe just lower it a little bit, maybe people would actually, you know, have the incentive to buy it. But anyway, guys, that's it for me. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. If you are interested in learning how to trade, make sure you check out the tutorial popping up right here, right now. Until next time, stay crypto. And of course, peace out.